It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another Real Estate Podcast, your largest real estate podcast library in Australia, as we talk property from Darwin to Canberra and every city in between. You can stream us on multiple platforms, including iHeartRadio. You should know Spotify. You should also know Apple Podcast, as well as Amazon for our new listeners. And don't forget too, if you are a new listener, tell a friend who might be into the whole real estate market like you are. They might be on a property journey. Let them know of the Real Estate Podcast, because they'll be able to digest over 1,000 episodes now. Well, the weekend, it is here, Saturday, March the 15th. Since interest rates began rising, we mentioned this the other day, smaller capitals like Perth, Brisbane and Adelaide have outpaced larger cities in price growth. Sydney saw declines, particularly in expensive suburbs, while Melbourne's market, we know that has remained soft, with prices still 4.7% below their March 2022 peak. However, rate cuts recently, I think it's fair to say, has sparked a little bit of a rebound, boosting buyer competition. And with the upcoming election, traditionally, rising home prices made voters feel wealthier. But that sentiment, it is shifting, as reported by PropTrack. If you are feeling a little bit wealthy at the moment as a result of any property portfolio, well, this morning we're going to be talking about how you can build a successful investment portfolio. Sometimes this can present itself in such a way that people can't really get their heads around how to do it. Now, people might know friends that have got property portfolios, but that doesn't necessarily make them feel any easier if they're just starting out. So we're going to take a little bit of a dive into portfolio building, and more importantly, how to optimize your returns. And once again, because it is a weekend, Anthony Landahl is here. He is the mortgage broker at Equilibria Finance. And a very good morning to you, Anthony. This is a big subject that we're talking about today, because, as I say, people can know somebody that's got a property portfolio, but it just doesn't mean that it makes it any easier.
No, good morning. Great to be here again, Craig, and you're spot on. Building an investment portfolio is a much different mindset to buying a home to live in. Property's just, in pragmatic terms, another asset class. You've got shares, you've got other opportunities for investment. Property can be a fantastic investment if it's done properly.
Now, you work closely with your investors to secure the financing side of it. So for those investing for the first time, when it comes to particularly a property portfolio, what key advice do you give them to help them start out strong, making those really informed decisions and strategically build a successful property portfolio?
Yeah, for a lot of first-time investors, and even for those investing second, third, fourth property, the core fundamentals remain the same. And there's 3 or 4 core fundamentals that we run through with first-time investors or those coming back to build their portfolio. Firstly, understand your investment strategy. What's your strategy here? Do you want to buy one property? Do you want to use gearing to purchase get a portfolio of properties? Are you looking at living off the income? Are you looking at capital growth? Are you looking at being able to manage a negative gearing situation? So understand your strategy. Number 2, do your homework on good investment property. You're not living in an investment property. It's all about the yield and the capital growth. For example, does the region have, or the property have, strong capital growth potential? What's the history of that market? What's the region like? Its infrastructure, its economy? Is it growing? Are you relying on a certain type of tenant? For example, is it in a mining town, or is there good long-term tenancy? And what sort of rental income is expected? Thirdly, analyse your cash flow. Absolutely critical to understand what you can afford to firstly buy, but secondly, what it's going to cost you to hold the property. What I mean by that is you'll be getting a rental income and you've got costs to hold it, whether it's the interest, the maintenance, and the associated costs of managing an investment property. So understand that cash flow. Lastly, take the emotion out of it. Not every property makes a good investment property. You've got to do your research, do your homework, think about whether employing a professional like a buyer's agent will assist in identifying that right property. Whether it's in your local area or some other region within Australia, leave the emotion out of it. At the end of the day, it's an investment to help with your longer term wealth creation.
Wow, there are so many great points, Anthony, that you have just made. If you didn't catch all those points he's talking about, just rewind and have a listen back to that, because that is some critical information. Now, we often hear about leverage in real estate, but what does that actually mean? So if we look at your clients, Anthony, how do your clients use leverage effectively to maximise their purchasing power, also grow their portfolio? Because that's, at the end of the day, that's what you want to do. You want to be growing it, and you also want to enhance a client's long-term investment return. Those are the sorts of things that no doubt you're talking to all of your clients about, those that are interested in growing a property portfolio.
Some of the biggest parcel of work we do with our investment clients is the strategy up front and how they can use leverage, which essentially means borrowing money to invest or utilising existing equity in another property to leverage into another investment property. So it accelerates the process of wealth creation by allowing an investor to make a larger investment than they otherwise would be able to make. So essentially, you're using existing equity plus the new security to leverage or gear into another investment property. So it increases the size of our client's portfolio by allowing them to purchase additional investments for them and for their portfolio. One of the main things to bear in mind when you're using leverage or gearing is it's got to be a long-term strategy. It's a 7 to 10 year type framework where you might be maximising your borrowings. You need to understand your cash flow. But as you pay those loans down, as you get the capital growth, you really start seeing that benefit longer term of leverage when you're able to do that.
We are talking to Anthony Landahl this morning, having a look at how do you start a property portfolio. And we've got more after this.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
From a depreciation point of view, these houses, they're older, they're quite fully depreciated. And we're finding some investors have started to realise that there's actually more modern stock in neighbouring or more appealing suburbs that might only be 10 or 15 years old.
You touched on the investors starting to sell off, arguably selling off en masse. Could that actually create oversupply and potential price corrections? What do you think?
It could, but we're not seeing that happening. Essentially, if the investors are going to sell off, they need something else to be able to buy and something that's more attractive, and especially from a yield point of view. So we're not seeing mass transactions happening yet or mass listings coming to market in these areas yet. And if they do, I think that would lead to a bit of a correction.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
And it is a Real Estate Saturday. Yes, the weekend is here. If you're going out and having a look at property today, good luck with that. Maybe you're going out and having a look at a property to add to your existing property portfolio. Perhaps it's the second property that you are adding into the mix. We're talking to Anthony Landahl with regard to property portfolios. Anthony, many investors assume that buying a property is is a little bit of a set and forget process, but a great property manager can be a game changer. Now, what should investors look for in a property manager to ensure that their investment is well maintained and profitable?
Yeah, really, really important. There's the journey of buying an investment property, and then there's a journey of the ongoing management of an investment property. We just talked about leverage and gearing. We see a lot of home buyers who might own one home, use their existing home to borrow against and get back into the market with an investment property, sit the investment property there. But a great property manager can maximise the returns. The way they do that is they understand the local region. They understand what the market rent should be. They negotiate those rents with the tenant, so you're maximising the rent that can be produced from that property. They're managing the ongoing maintenance and potential renovations or capital works, but also ensuring you're not overcapitalising with what you're putting into that investment property. One of the critical ones as well is they're managing the tenant quality and lease terms. Having good quality long-term tenants in good strong leases will also ensure you get that ongoing income stream. You haven't got long terms of vacancy. You're maximising the rent and the quality of the tenant. And an area that's often not looked at is compliance with local laws and regulations. We've recently had some changes in New South Wales legislation. A good property manager will be across these, will know how to apply them and bring that down to your property. So a good property manager, as compared to a real estate agent who's got a lot of properties that they're just essentially managing a rent roll or even self-management of an investment property, may not ultimately be maximising the return and the cash flow and the management of that property. And a good property manager will bring that to the table for you.
All right, so that's the role of a property manager, and you touched on maximising returns with effective management. So beyond the basic property maintenance, a skilled managing agent really does, with what you're saying there, play a vital role in optimising investment returns. How do you help your clients not just protect their assets, but actively increase rental yields and that long-term capital growth?
It's almost a little bit of a combination of everything we've talked about right today, which is finding that right investment property in an area that makes sense in terms of capital growth and rental yields, potentially using gearing or leverage to maximise your portfolio opportunities, and managing the property. A good property manager is going to understand what the current market rent is. Are you maximising that current market rent? They'll know how to negotiate with the tenant. We work with some property managers who do an annual health check of all of our investor clients' properties, and they'll look at current rent versus market rent. Are you maximising the income that can be coming through at that point in time? Are there works that would assist in increasing that rent? What's the quality of the tenant? What's the longevity of the tenant and the substance to the lease? So that ongoing management will help you maximise that return. In terms of the capital growth, a lot of it's about that, what we talked about at the beginning, making sure you take the emotion out of it and stay disciplined in finding an investment as part of your portfolio. You potentially might even engage a professional like a buyer's agent to assist with that, who's doing all the research on those areas. So you're finding the right property and you're getting the right person to help manage the property to maximise the returns on it once you've secured it.
Gee, there's a lot of information there for people to take away this morning. Yes, property portfolios, it is great if you can do it, if you've got the time, if you've got the nous, if you do the research. All of those points that Anthony has just made is certainly going to make it a lot easier. All right, Anthony, I'll let you get on with your weekend. It is a Saturday, so the surfboard might be calling you. And thanks for coming back on this morning and talking about all of that.
The surfboard's on the roof racks and I'm off to the surf. It's a lovely time of year in the water. So have a great weekend, everyone. We'll catch up next time.
We connect you to the best real estate information across Australia. The Real Estate Podcast.